Ethereum holders, brace yourselves, a new report just dropped, and it could change everything. This isn't a rumor. This is a verified document shaking the crypto world to its core. Is ETH about to crash? Or is this just another manipulation before a major rally? Let's break it down. First, let's get one thing straight. This isn't just another influencer's hot take or some random FUD on social media. We're talking about a detailed, verified report from a highly respected blockchain analytics firm. These are the folks who track the big money, the hidden movements, and the data that drives the market behind the scenes. When they put out an alert, the entire industry listens. The document itself is circulating among top-tier traders and the institutions, and now, we're bringing the key details directly to you. The core of this report is a bombshell revelation. A massive unlocking event could be on the horizon, where they're talking about over $3.5 billion worth of Ethereum that has been locked in various staking protocols and investing contracts. According to the analytics firm, these funds are scheduled to become liquid within the next few weeks. Now, unlocked ETH doesn't automatically mean it will be sold, but the sheer volume is staggering. If even a fraction of this hits the open market, it could create immense selling pressure, the likes of which we haven't seen since the major market corrections back in 2022. But it gets even more concerning. The report highlights a series of quiet, yet significant, insider transactions. These aren't your average retail trades. We're talking about large transfers originating from wallets historically linked to major staking pools and the early investors. These wallets have started moving significant amounts of ETH to exchange-affiliated addresses. This is often a precursor to a sell-off. While the movements are subtle, the pattern is unmistakable. It suggests that those with inside knowledge might be positioning themselves to sell before the news becomes mainstream. The combination of a massive potential supply unlock and the savvy insiders preparing to exit could be the perfect storm for a significant price drop. If this scenario plays out, it could trigger a domino effect, leading to one of the largest ETH sell-offs in recent memory. As soon as snippets of this report leaked onto the internet, the reaction was immediate and brutal. Panic began to ripple across the market. You could see it happening in real time on social media. Retail investors, seeing the headlines and the initial dip, started panic selling. On platforms like Twitter and Reddit, threads exploded with fear, uncertainty, and doubt. People were asking, is this the big one? And should he sell now before it goes to zero? This fear-driven sentiment is incredibly powerful. Simultaneously, on-chain data showed a massive spike in exchange inflows. This is a classic indicator of selling intent. When people move their crypto from their personal wallets to an exchange, it's usually for one reason, to sell it. Within just a few hours of the news breaking, Ethereum's price took a hit, dipping by a sharp 4%. While a 4% move might not sound catastrophic in the volatile world of crypto, it's the speed and the reason behind it that are alarming. This isn't just a regular market fluctuation. It's a reaction to a specific, credible threat. And many analysts believe this initial dip might just be the opening act, the first tremor before a much larger market earthquake. But here's where the plot thickens, and things get really interesting. While retail investors are hitting the panic button and selling off their holdings, a different story is unfolding in the shadows. The very same on-chain data that shows retail panic also reveals another trend. Large, institutional-grade wallets are quietly accumulating. These are the so-called whales, the big players with deep pockets who often move the market. As the price dips, they are stepping in and buying. This isn't their first rodeo. This pattern raises a critical question. Could this entire report be a sophisticated setup? Is it possible that this information was strategically leaked to induce panic, scare retail investors into selling their ETH at a discount, and allow institutions to load up their bags before a major rally? History is filled with examples of this. Time and time again, we've seen that when fear dominates the market and the weak hands are shaken out, the smart money, the whales, are set to buy the dip. They understand that maximum fear often coincides with maximum opportunity. They thrive on this volatility. So, while the headlines scream crash, the hidden wallet movements at a whispering accumulate. So, where does this leave the future of Ethereum? Let's zoom out from the short-term chaos and look at the bigger picture. Long-term, the fundamentals of Ethereum remain incredibly strong. It is still the undisputed king of smart contracts and the foundational layer of decentralized finance, or DeFi. The ecosystem built on top of Ethereum is vast and continues to grow every single day. Furthermore, the development pipeline for Ethereum is more robust than ever. The transition to proof of stake, often referred to as the merge, was just the beginning. The roadmap includes major upgrades focused on scalability, like proto-dank sharding, which promises to dramatically lower transaction fees and increase throughput. There's also a growing intersection between Ethereum and the artificial intelligence, opening up entirely new use cases we're just beginning to explore. Clips of Vitalik Buterin and the other core developers consistently reinforce this vision of a more scalable, secure, and sustainable network. All of these factors point to a very bullish long-term outlook. However, we can't ignore the short-term reality. The threat of this massive sell-off is real, and the volatility is almost inevitable in the coming weeks. So, the ultimate question is, what should you do? Should you sell to avoid a potential crash? Should you hold tight and ride out the storm? Or should you follow the whales and buy the dip? Let's quickly analyze the potential scenarios. First, the short-term crash scenario. This is definitely possible, especially if the panic selling continues to snowball as more people learn about the report. We could see a further price correction. Second, the midterm recovery. This is highly likely. After the initial panic subsides and the weak hands have sold, the whales who have been accumulating will likely re-enter the market with more force, driving the price back up. And third, the long-term outlook. This remains bullish, provided the Ethereum 2.0 updates continue to roll out on schedule and the network's fundamentals stay strong. So, what's the final verdict? Is this report a genuine, catastrophic threat that could send Ethereum into a death spiral? Or is it a cleverly orchestrated trap designed to shake out the weak hands before the next massive leg up? The truth, as is often the case in crypto, likely lies somewhere in the middle. The threat is real, but so is the opportunity. Now, we want to hear from you. What do you think is going on? Is this a real threat, or is it a classic whale manipulation tactic? Drop your opinion in the comments below. Let's get that discussion going. If you found value in this deep dive and appreciate getting real crypto intelligence before it hits the mainstream media, do me a huge favor and smash that like button. And most importantly, make sure you subscribe and turn on notifications so you don't miss our next breakdown. Thanks for watching, and stay sharp out, sir.